that, now we are going to go over institutional order flow. Now, the institutional part, we have also gone over in the past few videos, how those institutions operate, etc. In this video, I want to focus on how we combine order flow with the understanding of fair value areas as well. That will be very handy because, for example, in the previous video, we talked about fake order flow that will allow us to understand how we want to capitalize on fake order flow lags as well, and even normal order flow lags. Now, right here in this video, first of all, we're going to go over the understanding of fair value areas. Number 2, the conditions. Number 3, examples. And number 4, homework right there. Now, in the first slide, understanding of fair value areas, I want to bring it back to simplicity. So we have gone over that very in-depth and advanced understanding of how those orders work in a very, very zoomed in version, essentially. I want to bring that back to simplicity now, and I just simply want to go over the understanding of how we understand fair value areas as well from, again, a simple standpoint. We understand those fair value areas is where we can offer that fair value, create usable context to then continue lower. So what we're seeing right here on the right side is we have this fair value area, those 3 consecutive up candles right there. And then below that right there is where we have not offered fair value just yet. So that offering of the fair value happened right here, where we went higher, we went lower, and before that we even went lower as well. So we have those 3 swing movements, right? We have sell side, buy side, sell side. So that area where buy side was offered as well as sell side, that's where we have now offered fair value. So the green area is where we have not offered fair value just yet. So how far can we potentially retrace until the low of the fair value area right there to then potentially continue lower? Now this overall creates usable context. It gets interesting when we don't offer that fair value anymore and we start to retrace very deep into the fair value area, into the red area right there, to then potentially continue higher. Because if we're not offering fair value, then what are we doing? We are seeking liquidity. So right here, this is what we initially expect. Usable context right there to continue lower. But if that does not happen right here, and we create something like this, where we reject off of the fair value area, don't follow through offering fair value anymore, we are seeking liquidity in the form of the fair value area high in this case, which is for us unusual context. Now, this is things we already understood, right? From the previous modules, from the previous enrollments as well. But now we want to understand this with the combination of order flow. So where do we actually want to pay attention to unusual context and usual context? And in this video, we're going to dive into unusual context. So right here, the conditions. First of all, we need to understand that we need to have a clear higher time frame objective. And it's the same for fake order flow. To understand where fake order flow happens, you need to have a clear understanding of what the higher time frame objective is in the first place. If that's not clear, then you shouldn't be trading that chart, that instrument in the first place. So you should either wait or you should go to another instrument. So is there a clear higher time frame objective that the market at that moment in time is aiming for, where you can confidently say that right there, that is the next objective, that is the next target? Okay, then there should be a clear trend. Now, whether you are going to trade with the trend or against the trend, those are 2 things we'll dive into as well. But there should be a clear trend, because you can trade unusual context overall against the trend as long as it's still within the higher time frame objective. And what that looks like, we're going to dive into that. But it's important that you're not getting caught up in a consolidation. So to emphasize on this, again, what we want to avoid is no higher time frame objective. So if there's no higher time frame objective, we want to avoid it. If there is a consolidation or consolidations in general, then we want to avoid it as well, because we can't see if it's clearly usual or unusual context if there is a consolidation, because we might not be targeting liquidity. It might just be returning back to the 50% level to consolidate right there. So understanding this, let's go over a few examples. But to understand the examples, I first want to go over fake order flow right there. Now, not necessarily as in depth as we did with the previous video, but we need to understand that fake order flow is in alignment with the overall higher time frame objective, in alignment usually as well with the overall higher time frame trend that we have. Now, This is what we can capitalize on, and this, I would argue, is the highest probability form of unusual context, where it's in alignment with the higher time frame objective and with the higher time frame trend. But we also have normal order flow, normal unusual context, where it's not necessarily fake order flow. So it's context, for example, not following through anymore. Now, this is still in alignment with the higher time frame objective, but it's not necessarily in alignment with the higher time frame trend. It's important to understand when we talk about normal order flow and capitalizing on that right there, there is still a trend. So in neither of these examples, we are talking about a consolidation or consolidating price action. Because whatever we want to do, we don't want to get caught in consolidation, because then this will not work. So even though you are trading against the higher time frame trend, you can still do that as long as you understand very clearly that it's not an actual consolidation. So with that being said, let's dive into a few examples. The first example I want to go over right here is on ES. And this is the example of the fake order flow. So the fake order flow right here is sitting right there. This is a fake order flow lag, because overall the higher time frame objective at this moment in time is still to continue higher and take out this all-time high right there. So the higher time frame trend is as well still to continue higher. So it's in alignment with the higher time frame trend. That makes this right here a fake order flow lag right there. Doesn't make any sense. Again, what we touched on in the previous video as well. Now this fake order flow lag is still an order flow lag. As in, it's a fake order flow lag, yes, but it's still a fair value gap right there. It still has a fair value area in itself as well right there. So that is something that we want to take into account right here, because we want to use this previous order flow lag, this fake order flow lag right there, essentially to make sure that it doesn't prove us wrong. So what do I mean by that? We understand this fake order flow lag right here, we are most likely not going to respect that to continue lower. But in rare occasions, we could still create a rejection, or we could still create a continuation lower right there. So we still want to be somewhat careful that we don't get proven wrong and we do indeed continue lower and we get caught in a few losses right there trying to long this right there. So how do we go about that? We want to mark out the fair value area right there in this case, and we want to study the rejection on a time frame below. So for example, if we go into the 4-hour time frame right here, on the 4-hour time frame, what we'll see is we will get rejections from the fair value area sitting right here. Then those rejections, they will not follow through, as in we will not create fair value gaps to continue lower overall. We will not create huge rejections. But what will happen is we will create, and we will simply respect discount rates and order flow right here, bullish order flow to continue higher. So what we're doing is we're taking into account this fair value area right here to make sure it is getting, that we're not offering fair value anymore, it is getting disrespected, to eventually target the fair value area high, to eventually simply continue on our higher time frame objective journey towards that high right there. But this one is a little bit of a nuisance, as it's a little bit in the way for us. So we want to make sure that once we retrace back into it, we are creating a rejection right there, which is perfectly fine. But that rejection is followed by, again, a continuation higher, respecting overall previous order flow lags right there on the bullish side. When this happens, we can simply look to continue higher right here, and we can simply start capitalizing on the movements higher right here as well, because we understand this is more likely a fake order flow lag, and now we have also confirmed it to be a fake order flow lag by understanding the fair value area is not holding because we are not offering fair value anymore. Now, an example for your own study as well, because this has not played out yet and it could very well prove us wrong. So this makes it very interesting right here. Now, here we are on silver. And on silver, we have determined it to be the higher time frame objective, that high right there. So overall, we've been continuing higher. The trend has always been bullish as well. So there has been a clear trend right here as well. And what we see is that we create this fake order flow lag, very similar to the ES example that we had. Before we are about to reach those highs right there, we create this fake order flow lag right there to trick people into the market so they can add new buy pressure to the market overall, so they can continue higher right there. Now, right here, this fake order flow leg has a fair value area sitting right there. That's the low of the fair value area. If you go down a time frame right here, then you will see the rejections that we have. And this rejection actually happens very interesting in one singular candle right there. So what we see right here is that we had a sting into it. We actually, within this candle formation, we had this continuation lower right there. That's the rejection from the fair value area. And then afterwards, we continued higher again. Now, once we start to continue higher again, we can simply start to capitalize on this bullish order flow right here to continue higher as well. Now, this is essentially us waiting to get rid. So making sure that we're not proven wrong right there with that fair value area, the fake order flow leg, so that there's more confluences, more signs that we still want to continue higher towards the fair value area high right there as well, to make sure it's an actual order flow leg, to then wait for bullish order flow to align again with overall the bullish higher time frame objective that we have right there as well. And then we can capitalize on this move to potentially continue higher. Not financial advice, just study it, just tape read it without anything on the line right here on silver. Now, right here, I want to go over Euro US dollar, and I don't necessarily want to go over the fake order flow, but it's still unusual context right here. We could argue this is a little bit lower probability because there's still a clear higher time frame objective, but it could be against the overall trend, the overall higher time frame trend. So what we're seeing right here is that we have this sweep right there of that high. This is the bigger fair value area right here. We don't offer that fair value anymore, and we actually target the fair value area lower right here. Now, there's a lot more going on. Let's understand this a little bit better. We previously had a weekly usual context sitting right here. This weekly fair value gap right there, and we reached the context high in the form of this high right there. Now, that high is actually getting swept, and we don't follow through right here with new fair value gaps to actually continue higher. So what happens? We have buying pressure right here. We have buying pressure. This right here, this high is a great position, or is a great area right there to get rid of those buy positions. So to get rid of those buying pressures and to also add sell pressure to the market, because we're actually selling that buy position right there. So offloading those positions. So what happens right here is that then this low gets targeted again right there. Now, this is also understood, of course, what we understand to be, we are not offering that fair value here anymore. So instead, we are seeking this liquidity. So if we go into the 4-hour time frame, then we see right here, we create bearish fair value gaps, and eventually we create just simple order flow to continue lower as well. Now, what we'll notice, and which makes this quite interesting as well, is that since this is not necessarily in alignment with the higher time frame trend, the delivery overall is less nice. It's not a nice delivery of order flow to continue lower towards this low right here. Why? Because this is not in alignment with the higher time frame trend. Because the higher time frame trend, and what is the higher time frame objective? Well, what do we see right here? The higher time frame trend, we could argue, is still somewhat to continue higher right here. And on the monthly, we have this monthly fair value gap right there. So if we do want to retrace back into that, we have a higher time frame objective, that higher time frame level again. So that fair value area is getting disrespected to continue lower right there towards that monthly fair value gap. That makes sense because it's part of the overall higher time frame objective right here. But if we do want to continue higher and continue the higher time frame trend, then we'll see something like this. This is where we'll see the nicer delivery to continue higher. Now, again, an example right here, not of the fake order flow of silver, and understanding just the normal order flow where this can still happen, where it's in alignment with overall the higher time frame objective, but not with the overall higher time frame trend. So this can still potentially be capitalized on as long as you understand fake order flow that's in alignment with the higher time frame objective, it's in alignment with the higher time frame trend. That's the highest probability unusual context that you will find. Then, in alignment with the higher time frame objective, but not with the higher time frame trend, that's lower probability, so we could argue mid probability unusual context. Now, the example we're going to go after right here, after this example, where we are consolidating and we don't have a clear higher time frame objective, that's exactly the unusual context. That's the lowest probability what we want to avoid. So right here, we are continuing higher. We have this fair value area sitting right there. Now, overall, we need to understand that we are not respecting this fair value area anymore. So we are not offering fair value anymore to then eventually continue lower as well and target the fair value area low sitting right there. But it's not in alignment with the higher time trend, because the overall higher time trend is still bullish. So when we go into the lower time frame right here, well, lower time frame into the daily time frame, so one time frame below, we'll see that the price action right here is not good. It's not a great delivery overall. So that makes it quite difficult to capitalize on, where we could argue we only have one clear sting into that fair value gap to potentially continue lower towards the fair value area low right there. But the delivery, like we saw on Euro US dollar just now, is not great right there. And that's because it's against the higher term trend, making it mid probability. When it's fake order flow, like this example right here, it's high probability, a nicer delivery overall. Now, the last example right here, and this is the lowest probability. So fake order flow, we had high probability, then the mid probability, where it's not in alignment with the higher term trend. And then we have the lowest probability right here, where it's just a simple consolidation. We're not too sure what it wants to do overall right here. So how can we spot this consolidation? Again, order flow lags, not holding, not following through, fair value gaps not getting respected, ugly two-candle rejection, deep retracements, things we've gone over as well. This is when we are looking at a consolidation, and when we are not necessarily looking at order flow or fair value areas getting disrespected right there, or fake order flow. So this, for example, when we create a fair value area right here, yes, we could argue, well, it's reached that fair value area high right there, and we are not offering fair value. We could potentially continue higher, but look at the overall delivery right there. It's extremely difficult to actually capitalize on this without taking any loss right there. So if we take a look at some more fair value areas right here as well that we have, for example, this fair value area, where we could argue the same thing. We're not offering fair value anymore, but all we're doing at this moment in time is we are just staying within the 50% of this consolidation right there. So we're constantly returning back to the 0.5 line right there of the consolidation extremes that we have. So this is not something that we want to pay attention to when it comes to unusual context. Make sure your unusual context is always at least in a very clear trending condition. So again, it can be against the higher time trend, but as long as before that, we had clear trending conditions as well. Then based on this, we can move on to homework. So for the homework, I would love you to have you capitalize on fake order flow. Now, not necessarily, of course, going into silver, for example, and saying, well, right now I'm going to do a 10K challenge right there, and just because Ario said so. No, don't do that. But just study how you can capitalize on fake order flow. So just without anything on the line for now. Very important. Then also spotting unusual context. So like we mentioned, we have that fake order flow, which is that high probability unusual context. We have that mid probability where it's a clear higher time objective, but against the overall higher time frame trend. So essentially normal order flow all of a sudden not following through anymore. And then we have the low probability where it's just a consolidation as well. Study that. And then we'll also go over in the coming videos on capitalizing on normal, so usual context. All right, perfect. Thank you.